You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are watching and listening to the Financial Survival Network. I'm Kerry Lutz. Well, there's no guarantees in life. You know that. Is the economy overheating? I mean, it's been functioning at such a low level that now that it's starting to get close to quote unquote normal or back to normal, what effect is that having? I'm not sure. Inflation looks like it's on the horizon. Why don't you send us an email to kl@kerrylutz.com. Let us know your thoughts right now. John Rubino, dollarcollapse.com is with us. So, John, is the economy overheating, or is this the new normal that if we try to get back to where we were before, we wind up with all these adverse consequences?
Kerry, well, this is such a great story because think just a few months ago, the new government came in, inheriting a flat on its back, lockdown, crushed economy that desperately needed all kinds of bailouts and stuff like that. So they lined them up. They do a stimulus relief plan, and then they're talking about another stimulus relief plan, and they've got an infrastructure plan in the pipeline, and they're going to forgive student loans, and pretty soon they're going to bail out all the states and localities. Meanwhile, while all of these bailouts are happening and or being planned, house sales and prices are booming. Car sales just blew through estimates in the latest month. What was the other one? The jobs report was epic. It was huge compared to the expectation. So, and of course, inflation is up because manufacturing is booming, and interest rates are up because inflation is up. So, we just within that 3 or 4 month stretch, we are now an economy that looks like a runaway bubble. We went from being just crushed by the pandemic to being, it looks like in need of restraint. In other words, normally, for the entire stretch of human history prior to this year, an economy like this would have sent the Fed immediately to raise interest rates and would have had the government either raise taxes or cut spending or do some other thing to slow it down. But we're not going to do that. I think we're going to continue with these bailouts and these stimulus plans just because there's so much momentum for them now. To pull that stuff now would just freak out all the constituencies that are counting on them now. So it could be that we meet a bubble with more stimulus as kind of an experiment here to see what happens. And I kind of suspect it won't be pretty. We'll see. But it seems like that's what we're headed for.
We usually call that throwing gasoline on the fire, but here this could be just throwing some C4 plastic explosives on the fire, or maybe some nitroglycerin just to see the fireworks, and it destroys the entire town. We've seen that before. Hey, one thing you mentioned here is a SuperMario video game from the 1980s. Obviously, it's probably originally boxed, never used, sold for $600,000. I mean, that's getting to the lofty valuation ranges of non-fungible tokens here.
Another sign that we're in a bubble, but that's another great story. Think about that. Some guy's going through some stuff in a drawer that he hasn't looked at for years and years, finds a brand new boxed up video game, and the thing turns out to be worth $600 and some thousand. Imagine if he unwrapped it just to check it out before he found out how much it was worth. It would have been like a $400,000 mistake. But he or she was smart enough.
Oh, it's a he.
It's a he. Okay, so
I'm sure it's a he because girls were really not into these games in the 80s. So unless he had a really smart spouse or significant other who found it in the drawer and said, "This is worth a fortune."
Well, no, that's what it could have been. An empty nester couple their adult kid finally moves out. They start going through his room to clean it out and, use it for something productive. Go through the drawers, could have been the mom going through the drawers, and finds, his old video games and stuff like that he hasn't looked at since he was a 9-year-old. And there's one that they gave him that just never got unwrapped.
Or
it could have been the mom.
Fell behind the drawer. It fell behind the drawer, and it was lost for 30 years. And then all of a sudden they're moving. And can you imagine? That kid has caused them nothing but grief. He was living in the basement apartment. They couldn't get rid of this kid, no matter how hard they tried. And here they get back almost their whole investment in this loser kid in one fortuitous find. I mean, the story, this is a Hollywood ending here that writes itself. And I think us boomers here with these kids that don't want to leave, thank God mine did a long time ago, but the boomers where the kids are stuck there in the cellar basement, like my friend's uncle used to call his kid cellar boy and attic child. This gives an entire generation, our whole generation, hope, John, that maybe these kids did something right by losing something that was expensive. These games were expensive for their day. They lost it, and now it's like finding a Rembrandt in a thrift shop, right?
Yeah. Well, I hope the family's not listening to this podcast, though, because we could be getting a lot of this wrong. But I have sort of a similar story. My son, who's now 23, moved out a while back, and I was going through, our house was just so full of junk, and I was just taking stuff to Goodwill and everything. And then he calls me and says, "Hey, I want my Sonic the Hedgehog game." And I said, "Okay, I'll go look for it." And then I realized while I'm looking that I'd taken it to Goodwill. And it turned out that game plus 3 or 4 other games of his that I just took to Goodwill were worth more than $100 each. So somebody at Goodwill got a windfall because of my stupidity. And, that was something where I had some explaining to do there. But yeah, it's amazing what is sitting in attics and basements that is valuable now. Because, what if somebody in your family had a bunch of old baseball cards and they put it in a dry place and forgot about it? You open that thing up now 30 or 40 years later, and it's thousands and thousands of dollars, depending on who you've got. So
it was just a story. They found a Tom Brady card that he happened to have signed, and it was his rookie card. And I think it went for $2.2 million.
Yeah. Yeah.
Before you throw your kids' garbage out, you need to appraise it all. Bring an appraiser in. It's worth it, because it could be your lottery ticket. Hard to believe.
But anyhow, the overarching point here, getting away from millennials and boomers looking through the millennials' trash and stuff, is that this is the kind of thing that happens during a bubble when inflation is starting to run out of control, because you don't get people with the spare cash to buy things like this, except after a long period in which a lot of people have been extremely lucky. The NFTs that are selling are mostly Bitcoin millionaires buying them because they've made 50,000 times their original investment in Bitcoin, and now they're playing with house money, so they can buy stuff like that on a whim. And it's the same thing with collectibles. Those things, they always have some value, but their value peaks along with the economy. And so when a financial bubble reaches its popping point, that's when you have these crazy numbers being thrown around at auction houses and places like that, on eBay and everything. So this is yet another sign, along with house prices soaring and car sales inexplicably soaring, that we are towards the end of this process. And the way it probably bursts now, see, this is one of those rare times when you can kind of sort of see how it's going to burst, because interest rates are going up at the same time inflation is going up. That's what's driving interest rates up. And the 10-year Treasury hit like $1.72 or 1.72% today. So it's not far from 2%. When it hits that new handle, when it goes up into the twos, that's liable to spook the financial markets right there. And there are air pockets everywhere under overvalued stocks and sovereign bonds that have no business with negative yields, and houses that that sold for $200,000 a year ago was flipped for 300,000 earlier this year and is on the market for 450 right now with multiple offers. Houses like that, they're going to go back down to that 250 or so range when this all blows up. And it feels like we're not far from that.
Hey, and what about air travel, the way that's picked up? Now, it's domestic because large swaths of the world are still basically locked down, but we're almost to the point where it was right before the pandemic in March of last year. PSA said a couple of million less travelers, a couple 100,000 less travelers went through TSA searches. I mean, that's who thought that was going to happen?
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Yeah, I kind of thought the airline industry was dead, that they would all have to go bankrupt along with the cruise industry. It looks like, well, I don't want to get too political here, but this really fits with the pattern of our response to the pandemic being in large part political as a way of winning the November elections. And once the election is over, a lot of the really draconian stuff that happened could be lessened or done away with altogether because there wasn't a political advantage in it anymore. So a lot of people just, a lot of states like Texas and Florida in particular are just doing away with the lockdowns altogether. And a lot of others are easing up. And people are just, we're so sick of staying home and not being able to go places that you have huge pent up demand. And that's what we're seeing right now is this kind of reflexive, I don't even have anywhere to go, but I'm going to go somewhere just because I want to fly, that kind of stuff out there. And I don't even really have that much spare money, but I'm going to eat in 5 different restaurants in the next 2 weeks, just because it's been a year since I've been able to do that. So we're seeing a lot of that stuff, kind of the rubber band snapping back. So we'll see if that continues and we can legitimately say that the economy is booming. And I think it's possible that we will be able to say that, because of all the stimmy checks that are still going out. We're still flooding the system with money, and that money's going to get spent now.
You got to get your stimmies. If you haven't gotten them yet, get your stimmies now and get them forgiven too while you're at it. Because you want to do that, right? You got to get them forgiven. That's the most important thing. And
stimulus checks?
Yeah, the stimmies, as they call them, right?
Oh, I'll have to tell my son, I didn't know that you have to do anything after you get them. I knew with those PPP loans, you had to get them permitted.
PPP. The other ones, no. Like you just have to not make enough money for it to be disqualified, not get it, which I probably aren't getting them anyway.
Well, I'll bet a lot of realtors are going to have that problem now, and car salesmen, because they're making serious money all of a sudden.
Yeah,
so.
Serious money. Hey, and Tesla is setting record for their car sales, right?
Blowout numbers, yeah. But you know what? Tesla is still overvalued, even with a good quarter like this. And one of the other things, you see, this infrastructure plan at first blush looks like it's good for the early electric vehicle makers, but it's actually not in relative terms, because one of the things they're going to do via the stimulus or the infrastructure plan is build out the electric charging network in the US. Well, Tesla already spent a bunch of money to build out their electric charging network. So now it looks like the government is going to build out Ford and GM's electric charging network, basically with public money. So that is not an altogether good thing for Tesla in relative terms. They're going to grow no matter what, but the government is going to help their competition by taking away the one big drawback of that competition, that they didn't, that there wasn't a coast-to-coast charging network out there yet. And if we build one in the next couple of years, then everybody's on a level playing field again. So
very true.
Yeah.
Not agree with you more, John. We're in for some interesting times here. It just reminds me what President Eisenhower said. Things are more like they are now than they've ever been before. I don't know what it means, but it definitely, right? I mean, it definitely rings a bell here. You got to admit.
Well, you know what? We're living in a 70-year super cycle bubble. And this is the peak, the very peak of this epic, once maybe in human history, financial bubble. So yeah, you could legitimately say that things are more now like they are than they've ever been, because this is the peak of this bubble. Our entire lifetimes have been spent in this financial bubble. We've never known anything else.
Hey, well, bubbles feel great because the dopamine's flowing when the bubble's inflating, but eventually that thing pops, and then you get the opposite of dopamine, and it really, your displeasure center gets lots of stimulus. Dopamine is needed for your pleasure center, but when the displeasure center gets stimulated, nobody's happy.
Well, see, but that's the intellectual challenge for us, though. It's easy to make money during a bubble, but to make a ton of money when the bubble pops is really hard because there's timing and there's, market psychology going against you and everything. So the real dopamine rush is when you bet against a bubble and you turn out to be right. So that's what we've got to try to do in the next few years here is set up our own version of the Big Short and stick with it until it pays off. And then we're, in the tiny minority of people who played this like geniuses, while everybody else is getting creamed. So that's our challenge for the next few years.
Yes, that is the challenge. And that is a big challenge. I think we're going to leave it at that. So go over and check out dollarcollapse.com. Sign up for John's newsletter, as well as ours at financialsurvivalnetwork.com. And hey, make sure you send us your emails. Let us know what you think. We did have a question, John, but I can't remember what it was. It was
a good question.
Yeah, it was a really good question. And I promised, thank you for your insightful program. This is from Tom. I am well prepared for the likely coming events, and my understanding is on firm ground. The question I put to you and John is, what do I do after I sell my gold and silver holdings? I was able to see the sell-off in 2011 coming, and he sold it then. Elevated relative strength index, and of course the moving average. But the problem is where to go. Not in U.S., real estate, stocks, bonds, et cetera. Any thoughts? Well, I have my thoughts, but what do you think of that question? And by the way, thank you for that question, Tom. It's really relevant.
Well, yeah, I mean, that's on a lot of people's minds, because whenever you set something up, you want to know what to do if it works out, right? But I'll say, first of all, that's the problem we all want to have, right? We want our gold and silver mining stocks to just rock in the next few years in response to this big financial crisis that we see coming. But there will come a time when we want to cash out because all the dumb money is trying to buy our stuff from us, right? And that's when you happily hand it off to all the newbies coming into the market with desperate money. And so yeah, then the question is, what do you do with all the cash that you got? Because maybe you still don't want to be in cash, but that's kind of a wait and see thing, because there's no way to know exactly the shape of the world when this big crisis that we think is going to come finally comes. So we have a complete new set of decisions to make at that time. And it could be that, let's say the housing bubble bursts and houses there are for sale signs everywhere. It wouldn't be unreasonable to take your gold and silver profits and put them into some rental houses. That might be something to do if the real estate market has tanked. And it could be like if you go back to 2008, 2009, high quality equities were super cheap. I think the Dow was at like 6,000 or something like that. And where is it now? 30,000 and some, right? So you could have bought just a portfolio of S&P 500 stocks at a very low historical price and then ridden them up in the next cycle. So we're going to have to decide at the time whether we think there will be a next cycle. But while we're making that decision, we're going to be pretty rich. We're going to be sitting on some really big profits in precious metals. So I don't think there's going to be this huge sense of urgency, but I think it'll give us a lot to talk about if we're still having these conversations at the time.
Yeah. So let's see if there is still a cycle. If there is a cycle, then you'll know when the Dow or whatever index hits an all-time low, the ratio against against the precious metals prices, then you'll know it's time. It's really that simple. So, but if there isn't another cycle, well, let's not worry about that. Let's hope that it all somehow works out. Just we have a crash and then we move on from there. But it's a really difficult issue. And it's really something that make your money first and then worry about it. Don't worry about it now. You'll know what to do then. That's almost for sure. Because look, if you can buy a house for 200 ounces of silver, then your answer is going to be very obvious. You'll be buying houses. Depending how many thousands of ounces you have, that'll depend on how many you buy, and then you'll have rental income. You're just going to have to see the way it shakes out. If it's an inflationary depression that we wind up with, that's a whole nother issue, and that's going to require a different strategy altogether. If it's deflationary, it's going to be real easy to know what to do. And with that, we will leave you. Just send us more of your emails to kl@kerrylutz.com. John's site again is dollarcollapse.com. Ours is financialsurvivalnetwork.com. Both have free newsletters. John, we'll talk to you next week.
See you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.